There are now more exchange-traded funds in the markets than publicly traded companies, and that number is growing every day with new and novel ETFs being launched all the time. Joining us now to discuss some of the trends he's seeing out there is Rincon, head of ETF Sales and Strategy with TD Securities. Andres, always a pleasure having the program. Welcome back, my friend.
Thank you for having me.
Let's talk about what we're seeing in the space in terms of trends, thematic ETFs. Let's start there. Digital memory is all the rage. What are you seeing?
Before I get there, I do want to mention what you said, that there's more ETFs than stocks. I always say, too, there's also more words than letters in the alphabet. So, that doesn't mean that there's going to be a shortage of them and there's going to be a lot more growth as there's going to be more interest. On that note, thematics is an area of huge growth right now. And I'm not sure if that's what that says about the markets, if I'm honest. But we're seeing a lot of interest in thematic ETFs right now. And it's getting a little bit into silly season, if I'm honest, with some of the launches that we're seeing right now. We're seeing 2x on single stocks that are doubling in a single day just because they have some AI exposure to them. But we're seeing a lot of different trends and definitely interest there. So just year to date, $75 billion has gone into thematic ETFs. That's 11% of all inflows in the US, for example. So that's like a significant amount of money, given that usually, as you know, the traditional beta products dominate in that space. So it's been really, really interesting to see that space just gather momentum again. It wasn't long ago, let's call it now 4 years ago, where thematics really started to dominate again, and it slowed down a little bit. Now they're really coming up really hard. One of those that is really interesting, that's really fascinating, is DRAM or DRAM from Roundhill. It's a memory ETF, and this ETF has been or is the fastest growing ETF in history. And that's interesting because the previous fastest was Bitcoin ETF, so IBIT, the first Bitcoin ETF in the US. This one has grown faster. It's been $10 billion since April when it launched. That's a lot of money going into a single ETF. Now, there are specific reasons why this ETF has gathered so much momentum, mainly because it's giving exposure to some securities which are hard to get exposure to in Korea. But it's really all focused on memory. And this ETF is at $12 billion now. It just launched resounding success. And because of that, we're seeing a lot of other ETFs go into that space. So thematic ETFs growing a ton. Another area that's growing significantly, or is going to very likely grow significantly if it is launched and approved by regulators, is prediction market ETFs. So step back, prediction markets have become very large in the US. They have now been approved here in Canada by the regulators for Wealthsimple and also Interactive Brokers, I believe. And I'm sure there's others that are going to be right behind them. But it's not an ETF. This is just on the markets themselves. Now, there are filings in the US on prediction market ETFs, and I do believe that if those get approved, there's going to be a lot of interest there. And then you can imagine how many different prediction markets you can bet on. And I think I'm using the right word when I say bet on, not necessarily invest in.
That sounds like now we're talking about risk, right?
Yes.
Prediction market ETFs, and we're talking about bet on.
Yes, these are basically binary ETFs, where either you get a return or you get zero, basically, on your return. They're based on the probability of an event happening. But there's, the world's your oyster when it comes to these sort of ETFs. The other area where we're seeing interest a lot of right now is exposure to private securities, mainly because of SpaceX. So there is a number of ETFs are now giving exposure to small portions of private securities that are coming down the pipeline to become public, or are believed to become public. And SpaceX is really one that has been very, very popular. And there are several ETFs in the US actually today that give you exposure to SpaceX, to the private version of SpaceX. Ahead of the IPO. So there's one like NASA, NASA, for example, in the US, RONB is another one, XOVR. Those have very small portions. Interestingly, one of them has a decent exposure because it has lower weighting, and obviously call it valuation, although it hasn't IPO yet, valuation of that fund, of that position has grown. So their SpaceX position is now sizable. So those are the three areas that we've seen significant growth. And like I said, it's
on the Mega-IPO one, what do you need to know about the risk here? I mean, we're talking about ETFs putting a wrapper around private assets that haven't gone public yet.
Yeah, so at the end of the day, it's like any other private security. They have to value and they all evaluate in certain ways. But it is a bit of an art in terms of how they value these securities. So just because you're buying SpaceX doesn't mean, the question you should be asking yourself is at what valuation you're buying SpaceX in private market, because once it IPOs, it will show a true valuation in the market, a public valuation, and that might be lower or higher than where you bought it. And it's very hard to know how these companies or these funds are valuing that SpaceX valuation. But there are obviously many risks there, and obviously there's a lot of people piling into this trade, which might be unwound when the stock actually IPOs.
Okay, so that's a lot of the thematic places where we're seeing a lot of growth. What about fund flows in particular? In a market that has had such a bull run like this and continues to hit new highs, where's the money going for the ETFs?
So the market's been very strong, but inflows have been even stronger. $760 billion in the US, about 80 or so in Canada. That's 80% year-over-year growth, just to put it into perspective. So still very strong demand for ETFs globally. And we're seeing, if you look at mutual funds versus ETFs, all the money's going toward ETFs, especially in what we're saying, like in thematics, that's all really ETFs. So we're seeing a lot of growth in that space. Now, what's really interesting is that we're seeing a complete barbell approach. So you're either going to ultra safe, ultra short-term money market or short end of the curve in fixed income land or cash ETFs, let's say, or you're going to full equity, which is very heavy AI and all these thematics. So it's a very much, given where interest rates are today, where credit spreads are today, there's a little bit lower interest for your traditional fixed income space, especially given how many products there are in fixed income land. So you're seeing a lot of people more gravitate towards very low risk, short end of the curve, short-term bonds, even in corporate land or money market. And then, like I said, equity. And equity is really where a lot of the inflows have been. This year has been dominated by US equity specifically. Last year, when we were talking about this, we had a lot more Canada, a lot more international diversifying, or earlier in the year, diversifying away from the US. Lately, it's been really much a US and AI play. So very strong inflows in that space.